to Withum's video series, The Alternative Route. Here with me today is Dan Huscher, Chief Operating Officer and Head of Product at Lukka. Dan, thanks for joining us today.
Hi, Colleen. Thanks for having me. Pleasure to be here.
So the crypto market continues to be a hot topic and area of focus. And today we're going to talk a little bit about principal market identification and exit price determination. So in your perspective, how do you identify a principal market and exit price in the cryptocurrency markets, and what makes that particularly challenging compared to a traditional asset?
Right. And so identifying a principal market and an exit price in digital assets presents unique challenges that it really doesn't exist in traditional finance, to be quite frank. Digital assets, they can trade across hundreds of different venues, all fragmented globally. We're talking centralized exchanges, decentralized exchanges, all operating 24 hours a day, 7 days a week, 365 days a year, right? And so these specific difficulties, they include really first market fragmentation and liquidity, right? Like a single asset like Bitcoin, for instance, can literally trade on hundreds of different venues simultaneously. And each one of these will have varying levels of liquidity profiles. They could have different trading pairs, different geographical concentrations, and there even could be some accessibility constraints coming in, depending on where you're trading from. So again, that market fragmentation is one of the first difficulties that we have to solve for. Second is the actual quality of the market itself, right? And so not all exchanges are equal in regards to how they monitor their order book, the integrity of their order book, and they even have varying different degrees of AML and KYC policy. So these are all things that we have to take into account.
So how does information quality impact crypto asset valuation, and what role do you think third-party pricing providers will play in meeting those regulatory standards?
Yeah, and so I come from actually a data background. So I've literally been in financial data and information for over 20 years at this point. And obviously, when dealing with information and data, quality is paramount. It really becomes the foundation of defensible crypto asset valuation, right? It's dramatically harder to do this in digital assets than in traditional finance, right? And again, a lot of the guidance out there from the AICPA and AIMA, they highlight this, right? Many market participants actually underestimate how poor information quality can invalidate an entire valuation process, right? And so what we're referring to here is really two things, like information from and about the exchange and its trading venue, right? And so unlike, regulated, securities exchange that may have oversight, from the SEC, for instance, here in the United States, we have to take a look at, market surveillance rules, reporting, right? And crypto venues, they operate with what I would call like minimal regulatory consistency globally, right? And so this creates, potential information quality problems, right? And so some of the things that we address in our methodologies is one around like the volume, and is the volume that's being reported by the exchange reliable, right? And so using volume and the amount of trading on a given venue, right? If this is manipulated, market identification for the principal market could produce wrong answers, and obviously that's a real issue. You also have to look at the reliability in the operational controls around the exchanges, right? So exchanges experience outages, halts, and even in some cases, as we saw several years back with FTX insolvency, right? And so using prices from a venue in a distressed situation, right, doesn't really represent orderly transaction prices. So you do have to control for that. And then there's also lack of controls and lack of standards, right? And so there's a bit of a misnomer in crypto that, everything is on chain and you can see it, perfectly and everything, fits nice together. That's actually not really true. Even tickers, across venues don't match, right? So identifying like what is being traded requires a normalization process across inconsistent naming conventions, again, across, dozens and dozens of exchanges. And then you also have to look at the quality of the data coming off of the exchange, right? And so you have to look at the recency of the data as well and assessing, is the pricing stale, for instance, right? So poor information quality here leads to the, questions and audits, right? Like, how do you know this price is reliable? What if the exchange data is wrong, right? Like, what does your price differ from other sources? And that's something that we do test against, right? So, and then coming back to your other question is, why pricing provider matters. And like, I've been literally part of due diligence meetings, from public funds, private funds that assess their vendors regularly. And it's, you really have to assess kind of their methodology. Like, is it transparent? Is it appropriate? You have to look at the data sourcing and the quality controls. You have to look at operational controls and governance. Is the pricing provider independent? Are they free of conflicts of interest? And are they aligned to regulatory and audit requirements that the customer needs, right? And so, this isn't optional, right? It's expected by institutional grade participants and regulators, right? So using unvetted data providers, for instance, or even building in-house systems, without institutional controls, it creates audit risk and potentially a failure in fair market value measurement, right? Which is clearly an issue. And so some of the things that Lukka does, to address these things is, first and foremost, we assess the quality of each venue that we monitor, right? And so we look at a variety of different quality ratings for each venue, and that's all well documented in our methodology. We actually multi-source data, right? So even if the venue is not selected as the principal market, we actually compare the principal market pricing to all of the other exchanges and provide metadata on why those exchanges weren't selected, like the price, the trading volumes, the number of trades, so on and so forth. Lukka also is, or we believe we are, the first in the industry to actually undergo SOC audits, right? And so, the operational rigor that's expected in, institutional financial data providers, it's, in many instances, customers won't do business with you unless you have these SOC controls and audits in place. So, that's something that we're very proud of and, have been doing now for over 6 years.
So you touched on this a little bit, but what happens in instances where the identified principal market isn't accessible?
Yes, this does come up from time to time. And so there's a bit of a nuance here. And I don't come from an accounting background, but we have plenty of experts, in Lukka that does. And, the way that we understand it is the entity must consider, or at least be aware of, all relevant markets, including those that they cannot actually access, right? So there is a little bit of a nuance here when it comes to, accessibility of the exchange. And so what does this mean in practice? Let's say like a U.S. institutional investor, holds a position in cryptocurrency. Let's say the U.S., so they can't access, for instance, Binance. And so, what does this mean, in practice, right? Because, they can't access due to jurisdictional restrictions, particularly for U.S. customers here, right? And so what you have to really take a look at is acknowledge that the principal market is objective, right? And so you must understand all of the trading activity across all markets, even if you can't access it, right? And you need to consider those prices in the valuations. Now, of course, if you can't access that, you do have to document it, right, in your, in your policies. And so, that kind of creates a nuance in some instances that, what we can do for customers is we can actually layer in their accessible markets for them and run the same methodology, right? And so this alleviates them of the operational burdens to pay attention to markets that they can't even trade on.
Yeah, so thank you so much for joining us today. A lot of great advice for our managers and auditors working in the digital asset space. And stay tuned for our next episode of The Alternative Route.